Web3, also known as Web 3.0, is a concept about the development of the World Wide Web, mainly related to blockchain-based decentralization, cryptocurrencies, and non-fungible tokens. The blockchain-related Web3 concept was introduced by Ethereum co-founder Gavin Wood in 2014 and is gaining attention from cryptocurrency enthusiasts, large tech companies, and startup investment firms in 2021. What does Web3 bring to investors? Web3 refers to the next technological evolution of the Internet, which eliminates middlemen, such as tech giants, and gives web participants more power to control their data and online identities. Currently, tech giants such as Google, Meta, Twitter, and Microsoft base a large part of their business models on the use of user data in exchange for huge profits. And the emergence of Web3 will break the cake of the centralized market originally monopolized by the tech giants in Web 2, allowing more decentralized organizations or individuals to eat these cakes. So, why should you care? Well, if control of the web is decentralized, not only do users now have more freedom, but they can also own a part of the Internet through digital tokens that reward them for their efforts to help develop and improve Web 3.0. So, why do you need to care? For a very simple and good reason. This field is the most efficient of all human fields put together in the last decade to compare money making. Let's look directly at the data, and next we'll show 3 charts comparing the world's most dominant investments and cryptocurrencies right now, using Bitcoin as an example. Bitcoin is actually one of the most dominant indices of cryptocurrencies because it's basically half of the market cap of cryptocurrencies. Web3 is also tightly linked to cryptocurrencies. So let's take the trend of Bitcoin and compare it to some of the traditional investments. The first chart is U.S. real estate. The green line for real estate in the United States. You can see this green line is almost a straight line against the bottom, which shows the return on investment in U.S. real estate. Over the last 12 years, that return on investment has only been 111%, which is 1.1 times the return. Bitcoin, on the other hand, has a return of 190,000 times. Look at the second chart again. The second chart shows the S&P 500, which is the U.S. stock market index. The S&P 500 is a little bit better than real estate, which has returned 2.6 times over the last 12 years, or 260%. But it's nothing compared to Bitcoin. Although Bitcoin has been in the news for the past 12 years, and you often read the news, its price movement tends to fluctuate dramatically in a short period of time. But looking at it for 10 consecutive years, it's grown by a factor of 1900,000, which means that 10 years ago, you invested $1 in Bitcoin, so today you would have gained $1,900,000. So if you put it in the U.S. stock market, $1 would be $2.60 today, so that's the difference between Bitcoin and the stock market. And the stock market over the last 10 years has been still considered a bull market for the U.S. stock market. So let's look at gold next. Gold has been the first choice of people to store their wealth for thousands of years, and all peoples from ancient times to the present have used it as a symbolic equivalent of their wealth. Well, gold is indeed equivalent and has only grown 52% over the last 12 years. Compared to the 190,000-fold growth of Bitcoin, gold's trend remains worthless. So these 3 charts I believe should give you a very visual illustration. Bitcoin and the whole crypto world behind it, and Web3, the gap between the efficiency of making money and traditional investment products. Then if you are going to want to get into Web3, by comparing the 3 charts above, you will definitely be interested in Web3. You would then want to know how to get into it. If we imagine it as a game, there will be several roles. Then let's simply categorize them into roughly 4 roles. The red ones are the ones where you can make money. The white role means consumption, and the white represents the user. What do you mean by users? It is the consumer or the user of the platform. To sum up, the supply side creates value, and the user consumes that value. These 3 elements in red will be explained in detail next. First is the development team, then any Web3 project needs to have a founder first, and the concept of founder we use developers to represent. The founder of a Web3 project must have computer knowledge and blockchain knowledge, and then also needs to have a great idea and a good origin. After having the above elements, the founder can find investors, such as early-stage investors, to sponsor his team and realize his vision. In the blockchain space, in Web3, there may be no need to go public. The founders may directly do ICO through seed round financing and go directly to the public to sell their project's tokens. The funds raised would then be used to support the hiring of the development team or to do marketing campaigns. After the project is built out, as the developers just carry out the software engineering development suitable for ordinary people, but when users there is no need to use gender, country, geographical restrictions. This process is inseparable from the understand or recognize the production materials. You invest part of the hardware, and this production material is provided by a second group, miners, and then join the network. Miners, you can make money, which can also be referred to as you can see, which is the second right in the middle. In fact, the main role we introduce as the supplier of a company. The miner as many is the users role as there that are, applies to the average person entering Web3 behind them. Then miners often take their own resources into the game. Hardware Bitcoin miners, for example, take their own computing power to participate. Miners buy hardware and then join the network, which is equivalent to taking resources into the game. Then there's also taking capital into the game. For example, there are some that do staking. Then we count both of these categories actually as one role, which is the supplier. And the supplier is actually most suitable for ordinary people. There is no age, gender, country, geographical restrictions. As long as you can understand or recognize the project, you invest part of the hardware, and then join the network, or you invest to buy some agents, and then join the network. You can make money. So as you can see, we put it right in the middle. In fact, the main role we introduce is the miner. The miner is the role that applies to the average person entering Web3. Then there is another money-making role that we do not recommend for investors. This type of investor is similar to the investors in the traditional financial market. We divide the cryptocurrency market into a primary market and a secondary market. The primary market investor is the one who invests in early-stage development teams, in ideas and concepts, but the failure rate of such investments is very high. The success rate of such primary market investment is probably less than 10% on average. Then if you want to go to the secondary market, then you have to see if you are Warren Buffett. Secondary market investment is very much a test of the investor's personal financial strength and psychological quality, but also requires the investor to have the expertise and operational skills, such as long strategies, short strategies, arbitrage strategies, and hedging strategies. And anything that happens around the world can affect your returns. The US government, the Federal Reserve raising interest rates, or the Russian-Ukrainian war, then all will affect the price fluctuations of this secondary market. In fact, it also proves that it is very difficult for ordinary people to succeed in this role as an investor. Then we have to say, next, if people enter Web3 and choose the role of a miner, it is a relatively robust and safe role. So what kind of mining should we do? Just in other words, which project should we get into? The Web3 project we recommend today is called Aleo. And why do we recommend Aleo? In the current mining market, regardless of the project, all the miners in the world earned about $30 billion in total revenue in 2021 from various projects, the largest of which was Bitcoin. One project, Bitcoin, contributed $15 billion. Ethereum, which is the second largest source of revenue, contributed roughly $6 to $7 billion in revenue. The third largest is Filecoin, at $2.50 to $3 billion. So these three projects have actually accounted for 70% to 80% of the entire crypto mining market. All three of these major projects are actually experiencing varying degrees of problems right now. For example, Bitcoin. Because now we're hitting a bear market, even if you buy the best Bitcoin miner to mine, the payback cycle takes about 3 years. And the life of a mining machine is basically just 3 or 4 years. So Bitcoin mining has almost reached the point where it's not very profitable. The second is Ethereum, which has now moved from relying on miners to be suppliers to relying on investors to be suppliers. That is, whoever contributes more coins will become a node and can go on to handle network transactions. Filecoin is a project that could become the second largest immediately, but because its mining principle is different, Ethereum's miners' hardware and resources cannot be injected directly into it. Aleo is a good target that we think can take over such a big market of $6 to $7 billion. Aleo is a project that is about to hit the exchanges. It's like Bitcoin before 2008. As you know, the concept of Bitcoin was originally proposed by Satoshi Nakamoto on November 1, 2008, and was officially born on January 3, 2009. Aleo now is like Bitcoin in 2008. If we could go back to 2008 now, what would be the best option for everybody? It would be to run a Bitcoin program on your home computer and mine 110 minutes. But a lot of people missed that time, and the world is fair, there's no time machine, and there's no way you can go back in time, so we'll have to find the next mining program that can be a Bitcoin. And we need to get in before that program goes live, or get an advantage in the early days. What problem does Aleo solve? It's privacy and scalability. Here is another business truism, or a social truism, that any technology or product that a company wants to have value must solve the most pressing problem at hand. The bigger the problem it solves, the higher its potential value. So Aleo solves two of the most pressing problems, privacy and scalability. So privacy and blockchain scaling are the two hot issues in the blockchain field at present. Let's start with the privacy issues in the blockchain space. Many people have the misconception that Bitcoin and blockchain solve privacy issues, but they don't. Bitcoin is an open and transparent ledger. Many people agree that blockchain is a powerful technology that eliminates the business and political risks associated with processes managed by a central entity and reduces the need for trust. They create a platform where applications from different companies and even different types of applications can run together, allow extremely efficient and seamless interactions, and leave an audit trail that anyone can check to ensure that all processing is done correctly. While the other advantages of blockchain are enticing, neither companies nor individuals are keen to release all information into public databases that can be read at will by their own governments, foreign governments, family members, colleagues, and business competitors without restriction. There are also, for example, government agencies working with some wallet software through IP addresses. Although the blockchain itself is unidentifiable and anonymized, they use these portal IPs to lock your identity through browsers and mobile terminals or to track your behavior in the world. All these can cause privacy leakage. So what is the urgent need now? It's to address privacy. What is privacy? Privacy is very simple. It's putting clothes on data. 30 years after the development of the Internet, privacy has become a serious issue of concern to various countries, governments, and people in society in the Web 2 world. Various countries and regions are setting up laws to prevent the privacy leakage problem, but there is always a certain lag in the law. Aleo solves this problem in the Web 3 world by enabling data to be addressed. Next, we'll cover the scaling problem. Before we do that, we need to understand a scenario. The current major blockchains process 3 to 20 transactions per second, which is several orders of magnitude short of the processing power needed to run mainstream payment systems or financial markets, let alone decentralized forums or global micropayment platforms for the Internet of Things. So, scaling in blockchain means changing the way the blockchain network works to handle the increasing number of nodes and transactions in the blockchain. Each blockchain needs to remain efficient in the way it handles transactions. The faster and smoother the transactions on the blockchain, the better the user experience will be. Ethereum is now hosting the entire financial business, that is, DeFi, decentralized finance. The financial business on Ethereum is worth about $200 billion at its peak. At its peak, hundreds of thousands of people are trading on Ethereum. But these transactions are not directly carried by Ethereum, they are indirectly carried by some other public chains or exchanges. Then, from the end of last year to now, Ethereum has become overwhelmed after the market of NFT and DeFi has heated up. The POW approach will lead to a lower processing performance of the entire chain, which cannot support more people and more money in the above transactions and operations. So Ether must be transformed into a POS mechanism to solve the problem of scalability in Ethereum. So, Aleo not only solves the privacy problem, but also revolutionizes the underlying technology so that the blockchain can handle these privacy operations at scale in order to support more applications moving to Web3. So next, we use a graph to compare Aleo, Bitcoin, and Ethereum. We compare them on 3 levels. Let's start with the privacy issue. Aleo is the only one of the 3 projects that are opaque and it is privacy enabled. When you don't want the details of your transactions on the chain to be seen by others, you can use Aleo, which ensures that each of your transactions is anonymous, while only showing one hash to the outside world. But the 2 parties to the transaction are aware of it. For example, if it transfers money to B, then both ABs jointly hold the public key for that transaction and can go unlock the transaction information. Aleo and Ethereum both support multifunctionality. And Aleo is a multifunctional overlay. Third item is scalability. Let's picture to explain that Bitcoin and Ethereum use hash proofs. Both Bitcoin and Ethereum use hash proofs. Hash proof is a cryptographic cryptography technique developed by the U.S. Department of Defense. It is used for encryption. Hash proof was originally used for military purposes, and military secrets need to be kept strictly confidential, so the U.S. Department of Defense developed a series of encryption algorithms that make encrypting information easy while also making it difficult to crack the information. This set of encryption mechanisms, even using the most advanced computers, may take hundreds of years to crack. Then Bitcoin and Ether do use hash proofs, which are useful for the encryption and decryption of small amounts of information, but laborious for the encryption and decryption of large amounts of information. So zero-knowledge proofs came into being. A zero-knowledge proof can be understood as similar to a high-powered aero engine, an aerospace engine that has great thrust to send a rocket into the sky. Then that means it can encrypt a large amount of information. And there is almost no processing cap, and it can do encryption quickly and then up the chain. So what's the encryption process using? Just with the computing power that our miners provide. Miners need to provide CPU and GPU to help zero-knowledge proofs to do message encryption, and then the encrypted message is uploaded to the chain. And the zero-knowledge proof is almost unbreakable. We can say that Web3 is booming based on the success of Aleo, and the success of Aleo will drive a large number of similar projects to appear, and then a piece of this new model to do up. Then everyone will enjoy this infrastructure according to this new model. A great project must have a supporting team. One of the most central is Aleo's founder Howard Wu, who is young but a cryptographic genius with a BS in applied mathematics and a BS in computer science from UC Berkeley, as well as an MS in electrical engineering and computer science, and has been involved in Bitcoin for 11 years, participating in the writing of the seminal paper Zexi, enabling decentralized private computation. Howard worked as a software engineer at Google for a year after his undergraduate degree, then returned to UC Berkeley to complete his master's degree, after which he founded Aleo. He has contributed code to Wallet, Exchange, Zcash, IPFS, and Ethereum since 2014. The co-founders are Colin Chin and Raymond Chu, 2 of Howard Wu's classmates at Berkeley's crypto incubator. In addition, Alex Pruden, Aleo's current CEO, serves at A16Z from 2019 to 2020. He previously worked at Coinbase. Prior to that, he was a member of the U.S. Army's Green Beret Special Forces and a graduate of West Point. The summary is that the founding team is strong enough. The Aleo project's investors were led by Andreessen Horowitz on April 20, 2021. And Aleo received a total of $28 million in Series A. In early February 2022, Aleo received a whopping $270 million in Series B funding led by SoftBank Vision Fund and Core Management. This is by far the largest investment received in the zero-knowledge proof space. And Aleo is notable for attracting traditional VCs into this external space. SoftBank's Vision Fund, for example, has invested $100 million in Aleo. Samsung Next Ventures has invested $80 million in Aleo, and none of them had invested in similar Web3 projects before, let alone large investments. A16Z, Samsung Next, and Core Management have written letters to investors on their websites after investing in Aleo, explaining their change in investment philosophy and style to investors. Core Management specializes in investing in long-term profitable projects with core technologies that can be applied at scale. Then there are some necessary elements to participate in any mining project, and there are at least 3 elements needed to participate in mining in the Aleo project. Aleo mining requires computing servers with high computing power. First-class hardware provides more stable computing performance, longer machine life, and sustainable mining revenue. Our platform has a complete global supply chain and long-term cooperation with first-tier hardware suppliers around the world, so we can get the best supply price. At the same time, our platform has already laid out Aleo's mining machines in advance, and they are currently on the server room shelves, ready to be delivered to customers who need them. Aleo's computing servers need to be placed in IDC server rooms. Unlike traditional Bitcoin and Ethereum mining, Aleo mining is actually doing business for applications and needs a stable environment, so ordinary mining farms cannot meet the needs of Aleo's computing servers. As you can see, the 3 pictures on the chart are the server rooms of our platform layout in advance. Global Switch is our IDC partner in Hong Kong, Equinix is our IDC partner in the US, Digital Realty is our IDC partner in Singapore. These pictures are the real view of our server room facade. You are always welcome to visit our server room. At the same time, the rental cost of the room is also an important factor affecting the mining revenue. For example, the same performance of the cabinet, the cost in Singapore is 5 times more than in the United States, and the lease of the room business negotiations, standalone cabinet transformation shelves need at least 3 months. We have signed a contract with the room as early as March this year to ensure that customers can run the equipment on the shelves. Aleo's mining requires specific algorithm optimization combined with hardware, and there is a several times difference in mining revenue for different software algorithms, which is our company's core competence. Our company has more than 80 technicians who have been studying the algorithm optimization of Aleo and have done no less than hundreds of tests combined with different hardware, investing more than $4 million in testing equipment and hardware. After the end of testnet 2, we continued to optimize the algorithm. Currently, our algorithm combined with hardware mining efficiency is 4 times more efficient than the open source code released by the Aleo team. 4 times more efficient means, for the same capital investment, your mining revenue is more than 4 times that of the open source code. The above 3 elements need to be integrated in order to participate in Aleo's mining, which is difficult for ordinary investors to participate in. Therefore, our company has integrated the above 3 elements to participate in Aleo mining into a cloud computing power mining product, so that you can participate in Aleo mining easily and conveniently. Next, we come to the revenue distribution characteristic of the mining business, which is the power law distribution. We follow power law distributions in many areas of the real world. The first person to name a power law distribution was the economist Pareto, who found that in 19th century Italy, a very small number of rich people took the lion's share of the money and most families had very low incomes. The 80-20 principle, that is, 20% of the people get 80% of the income. During the economic crisis in the United States, the power law distribution was given new meaning, and the Occupy Wall Street movement brought attention to the alarming fact that in the United States, the top 1% of income earners took 15% of the income, and the gap between the rich and the poor continues to widen. In the traditional world, this problem has existed for a long time, and in some industries, it has existed even before we were born. For example, like in the West, the reason why the social class is so solidified is that real estate, finance, transportation, or manufacturing were already dominated by the aristocracy and the old guard 100 years ago. Ordinary people who want to join these industries can only sell their labor to earn some small money. So for new investors who wish to join Web3, we should go looking for new areas to become the head, which is one of the best ways to improve the efficiency of making money. Mining products are characterized by a gradual rise in revenue over time, and at a certain point in time, the revenue will exceed the cost, and the subsequent mining revenue is the net profit for the miner. At the same time, the volatility of the secondary market will also affect the timing of our token sale. There is a saying that mining well is not as good as selling well, so at what time should we sell token? From this chart, we can see that it is best to sell tokens in the 3 intervals in the chart, and our team will also give you some strategies and time points to sell tokens. To give you a simple selling strategy. After you get the token, you need to wait for the signal that the token price is rising. For example, right now we are in a bear market, and a bear market is the best time to lay out mining. Then mine the coins in the bear market and wait until you enter the bull market to sell the token. Then there are 3 big bull market curves in the past few years. You just sell the token in these 3 intervals of the bull market. If our company's code optimization can earn 3 to 4 times earnings appreciation, then it is possible to earn 10 to 40 times earnings appreciation by looking at the right time to sell in the secondary market. Currently, Aleo is in a phase not to be missed. Aleo released plans for testnet 3, the 3rd test network, in early August. Any large blockchain project will go through several rounds of testing before its official release. After that, it goes to mainnet, which is the landing exchange. And with each test, the project owner will release a large number of rewards to those who participated in the test. For example, Aleo announced in this testnet 3 that it would take 25 million Aleo credits to reward the developers, miners, and verifiers who participated in the tests.